if you're a foreign group and you're coming into and you're wanting to buy, let's take Sweden as an example, you're going to get a maximum of say 60 to 65% LTV, and it's going to be, if we take Sweden, it's going to be SEB, it's going to be Nordea, it's going to be Handelsbanken, and it's going to be Swedbank that you're going to be talking to. And if you're wanting to lever up to 75%, then you need to be thinking about what Anders was talking about, that we have a fixed income team and we've been placing a lot of bonds to take up that junior piece, and it's been that market has really taken off. So there's been a huge amount of bond issuings on real estate from a debt perspective, and there's been, for foreigners that have wanted to come in and really lever high, I think, across Europe everyone is talking about the availability of debt, but in the Nordics, I don't think from a senior perspective it's that easy to go much higher than the 60%, 60-65 threshold.
But that's the definition of senior debt. So, yep. But actually, when we found recently that the most competitive banks, and there were a number of them were the German banks, they've come back to the market. They're there. I think they're very keen to support investors that they know. So I would agree. Actually, I don't. Unless you're wanting to borrow 70-80%, and for most people I think those days are over, then actually there is quite a lot of liquidity in the debt markets, and it's not particularly expensive.
Development, I think, is difficult. It's very much sort of cash flow focused on the banking side, sort of ICRs, DSCRs. You need to prove the debt service. There's not a lot of lending on value. It's cash flow, which makes it difficult. So if you've got big vacancies, your leverage will come down.